Hello everyone. Today we are going to discuss another penny stock named Patel Integrated Logistics Limited. If we look at the pricing of the company, so the pricing of the company is stood at 21 rupees per share. If we look at the brief introduction about the company, so the company is involved in the business of air freights and logistics. Company is pioneer in the business of logistics and air freight with the clientele of airlines and other FMCG and pharmaceutical companies. Company is having around various companies obviously having various networks through which the company used to transport or perform their logistics operation well. Also, company is a member of a global logistic network. PF is a member of global logistic network. So it shows that the company is well known and established brand in the logistics space. Also, companies having preferred partner for the e-commerce giant pharmaceuticals, FMCG, IT, engineering companies, and company provides major income from their airline carriers such as Indigo, Air India, and SpiceJet to ship cargo internationally and domestically. Looking to the warehousing, so the company has a warehousing capacity through which they do assembling, sorting, and packaging of the products for different industries. They have different warehousing and different segments through which they can easily procure and easily receive packaged and assembled and then transport the products and provide them logistics services. Also, the company is having various segments such as company has diverse changes articles of association or memorandum of association to venture into the business of stocks, debentures, mutual fund, and other financial instruments. However, that business is not operational, or the revenue through which that business is less than 5%, and the major income from the business comes from the loading and cargo segment, which stood around 94% of their total income, and other incomes are less than we can say 4% or 1%. So if we look at the others, if we look at the freight is 1%, but the co-loading and the cargo income, it is because that the cargo income is the something which where customers are willing to pay, but in terms of other incomes other incomes in terms of other segment, their income is low comparatively with the cargo income and co-loading income with the clientele such as Indigo, Air India, and SpiceJet. If we look at the market cap, so the market cap of company is around 137 crore. The stock P is around 24.7. If we look at that median P of the company, so the median P is around 40. So the stock is said to be undervalued if we compare it with the industry numbers. Also, if we look at the book value, so book value is around 18.5. Well, that is fabulous number, and that is one of the plus point. If we look at the company pricing is around 21 and the book value is around 18, so it shows that the company is having its valuation equivalent to the net worth of the company. If we look at the ROC and ROE, so both stood at around 5%. Well, that would not be something which we appreciate much, but the company is a penny stock and the nano cap company, so that would be clearly that is an evident, and that cannot be I would say undermined, because see if the company is in penny stock or the price below some range, or the company is having a market cap of 100 to 150 crore rupees, so obviously there are something which are flaws and there are something which are pros, which we have to discuss, and then accordingly we will take uh, opinion on the whether the company looks well for them or not. If we look at the quarterly data, so the March 24 quarter has seen a tremendous growth of more than 40%. As we see, if we see the same quarter on the March 23, where it stood sales around at 64 crore, now it stood at 85 crores. It means approximately 20% or 15% of their increment in the sales on quarter on quarter base on quarter as compared with the previous quarter, year on year basis. Also, if we look at the quarter on quarter growth, so that is stood at around more than 10%, which is also a good in terms of growth numbers. Looking to their operating numbers, so the operating profit is around 2.78 crores, and the operating profit margin are same as somewhere around 3% on last 4 quarters data if we look at. So if we look at the yearly data, so the company has clocked highest sales return post covid, because pre covid the company is having around 448 crores, but then due to covid the company has seen a dip, and the dip goes on and on. Now the company is improving their financials and sales, so the sales has been improved from 212 crores to 234, then 278 to 291. So that is something which shows that the company is growing. And obviously the freight business, or the we would say cargo business through airline, has been seen a huge dip during covid era. So that was that can easily be seen in the results and the numbers of the company that are operating in that segment. Looking to the operating profit margin, so the operating profit margin stood at 3%, where the net profit is around 6 crores. EPS is around 0.86 per share. And looking to the compounded sales growth, so the sales growth are in the last 3 years around 11%. Uh, because you see the COVID effect is also there, so the number shows of 10 years and 5 years data shows a negative. But in terms of, we have to look it in terms of 3 years data, because that business is totally concentrated in the segment which has totally halted during the COVID era. So that is the reason why the sales have seen a dip, and the sales growth does not seems to be good if we look at the data of 5 years and 10 years time. However, the sales growth of 3 years is 11%, 12 months is 4%. Profitability has increased more than their sales growth. That is a good number. That is 380%. And also, even though the sales has seen a dip, but that profit growth has seen more than around 9% in 10 years of time. Stock price is around 7% or 4%. And 4%, and then 1 year CAGR return on equity is around 5%. Well, that would be good in terms of the growth numbers. If we look at the equity capital, so equity capital stood at around 65 crores, and now the borrowings of the company is around. I would say the company. This is the thing. This is one of the plus point which we have seen, that the company has consistently reduced its borrowings, and from 22 to 19, then 18, then 14, then 13, and now it stood at 8.56 crores. It shows that the company is consistently deleveraging themselves by paying off their long-term borrowings and debts, which shows that the company is totally focused on uh, relying on their profitability and the equity share capital. So that would shows the increment in their net worth of the company. Also, if we look at the trade payables, so the trade payables are same as what it was in the previous year, and trade receivables or trade payables has not seen a more increment. Looking to the fixed assets, so the fixed assets of the company is majorly because of land and buildings. So the, because company owned their warehouse, and and it involves some infrastructure as well, or the company is having their offices. So that would be the reason why. And also company is having vehicle for transportation, or the or also computers. So these all are the things that are necessary for the logistics business or the cargo lending business, and that is the reason why the company is having asset like this. And this is same as what it was in a year ago. So that seems that the company is having a decent fixed assets, and there is not much improve the increment or dip in this. If we look at other assets, so the other assets are something which we look into, because these are the current assets, and they shows that the what are the current performance of the company, and it is clearly visible if we look at the trade receivables. So the trade receivables seeing an increment of 91 crores, because the sales has been increased, so that is clearly visible in the trade receivables as well. However, that can be better as also, eh, if how that can be improved, or that can become better if the company works on it. Looking to the cash equivalent, so the cash is around 32 crore rupees, which shows that the company is having a around 137 crore of market cap. So company is having a 25% of their market cap in cash balance, which shows that the company is having huge liquidity, and the company will never go into insolvency because of their business or something, because they are already having cash in their hand, and they can pay off their borrowings in a one go if they seen any unforeseen circumstances. Looking into the operating activities, so the company is showing operating profit because of they have increased their receivables, but the trade payables has also seen an increment, and that is the reason why the company is totally increasing their receivable sales, and company is totally increasing their I would say cash from operating cash profit to more than 12 crore rupees. That would be good in terms of company like this. looking to the cash from investing activity. So the company, I think that company has diverted some of the stake, and that fixed assets has been sold around 6 crores, and that is the reason why the fixed assets is from, if we look at the fixed assets data, so the from 55 crores it's seen a dip of 49 crores. It shows that company has sold some of their fixed assets, which is amounting around 6 crore, but the company has also purchase and a few fixed assets that is amounting around 2.3 crores. Also, the company has sold their investments. Company has received some interest, dividends, and because the company is also going to foray into the business of investments on stock market, so that income could also be attributed or shown in investing activity, unless and until they are in a major portion, and that is being shown into operational income. But for the time being, it is shown in the investing activity. If we look at the repayments, so the company has paid off their borrowings to around 4.5 crores. Well, that would be a good number if we look at past year data. So company has received proceeds from borrowing, but in current year no proceeds from borrowing, but the company has repaid more than what they have taken in last year. So double, I would say it is double of what they have taken in last year. Also, if we look at the financial data, so payment is also reduced from 8.5 to 7.6, then 7.45%, and now it's become to as low as the 2.89. So the sales has been increased, but the interest payment in last 10 years has been seen at the lowest point, which shows that their increment in the net worth and the operating margin or the bottom line will also result in the increment as well. So if we look at the data days, so in this situation the company has data days of around 114 days, and working capital is tied to approximately 2.5 month or 3 months, which is generally in every business where working capital, if the working capital block for more than 3 months or 2 months of time, well, that would be an issue. But that is also depending on the type of business company is operating. So this type of business where working capital is around, if we look at the post COVID era, so it is around 85 rupees, 77 rupees, and now company is at that pace. So that is a good number. It shows that the company is on their right pace after and company has forayed, or I would say company has come I would say company has turned around from the COVID effect, because during COVID the working capital days has been increased from 85 to 1404, then 147, then company has reduced it substantially to 125, 84, and 79. So it shows that the company working capital is effectively and efficiently used, and company do not needs any borrowings. That is the reason why company has reduced their borrowings substantially. Now the promoters holding are around 36.85, so that is not much promoter holding. That is decent promoter holding, which I would say that that will not be an concern, and also that will not be something which we can say that is a plus point for the company, because the promoters have seen increase their stake from 39 to 40, then 41, then again to 39 and 36. So the promoter holding is not something which is to be worried about, and also not something to be celebrate about. So this is an overview of the company like this. If we look at the other factors, so there are some pros and there are some cons. So it is up to you that whether you are going to whether you are looking into this business or not. Also, this is an purely a fundamental analysis, so there are the certain projects or there are something that are being also there in the pipeline which I have not discussed. So you have to I have discussed mostly of the things, but you also have to discuss. You have also to look into that so as to understand how the company works, what are their business, and that gives you an insight and ways to learn about how to choose or pick a stock that is for growth, and that can be a multi-bagger for you. So from my side, this is a totally an informative and educational video. I hope that I'm not giving any portfolio management services, so ask with your financial advisor before investing into stock markets. I hope you all enjoy this video. Thanks for watching.